So about yesterday's post when I expected gold to drop, I've been getting a lot of questions about how I came to this conclusion. But firstly, this is cracking me up. That is hilarious. That's good one. But anyway, what analysis did you use to predict the fall? Guys, this is simple. NFP is the non-farm payrolls. It's a payroll report. It tells us how many people in the non-farm sector got paid. So to get an expectation of payrolls, we need to look at previous employment reports. We need to see, have people been losing jobs? Have they been gaining jobs? For example, let's get my economic calendar real quick. Let's go to the calendar and let's check out this week. Non-farm payrolls. Now, when we try to build an expectation of the payroll reports, we need to look at employment-related reports. For example, jobless claims, right? We go into the jobless claims and now we can see, have people been claiming jobless or not? So we look for the month of May because we are expecting May's payroll report. We can see from the first report on the 7th of May to the last report on the 28th of May. Have people been gaining jobs or losing jobs? We can see that people's been losing jobs firstly because the month started on 200,000 jobless claims and it ended on 215,000 jobless claims. So 15,000 people lost their jobs through the month of May. Now, jobless claims is an overall employment report. It's not only the non-farm sector, it's all sectors. So 15,000 is not enough to affect the payroll report. It's not a strong indicator of weak employment. But then we look at other reports as well, like the job openings. Now we can see that this report is how April ended, meaning the month of May started with 7.6 million open jobs, like vacancies. So there was a lot of available jobs to be taken. So this is a good sign. This is a strong sign of employment. And then we look at things like the PMI, the Purchasing Managers Index. If this industry is expanding, this likely means that they are employing people. The economy is active. These are signs that people are getting paid. So this is how I come to a conclusion that the payroll reports would likely be higher than expected. Now we look at May's non-farm payroll report. The forecast was 85,000. That was significantly less than the previous month of 115,000. And that's a steep drop down. Now, because all the employment-related reports was positive, showing strong jobs and expansion in the economy. So logically, why would the non-farm payrolls report be 85,000? That's basically a 30,000 drop from the previous month of 115,000. It makes sense. So according to previous employment reports, things are telling me that people's been getting jobs, or well, not exactly been getting jobs, but employment has been strong. There was a lot of job openings. Purchasing Managers Index were expanding. Jobless claims were not significantly higher. It was only 15,000 higher. So even though I did not expect the payroll report to be that high, I did expect it to be higher than expected, higher than the forecast, which means a strong dollar. So when we're trading fundamental events, we have to do fundamental analysis. We cannot just look at the charts and say, oh, we are at the supply area, it's going to buy an NFP. This is a fundamental event. And one more thing about the NFP and the CPI is these are the main events of the month. It holds the highest volatility throughout the entire month. All investors and banks across the entire world are looking at this data. So we need to do fundamental analysis when we are trading fundamental events. So when we're trading the non-farm payrolls, we look at employment-related reports to give us a forecast. So this is how I build a forecast on these type of fundamental events. We simply do fundamental analysis. It doesn't have to be thorough, just a little bit of fundamental analysis. We cannot look for technicals for fundamental events. We need to look at fundamentals for fundamental events. Make sense? Thank you.